This is Austin Real Estate Investing.
Austin Real Estate Investing.
We'll be discussing real estate investing in Austin, Texas, and bringing you experts from all different sectors of the real estate game. Your host, Jordan Moorhead, is a real estate agent and investor in Austin and is here to help you get started or to build your portfolio and explore new strategies.
Hi, this is Jordan Moorhead, and this is the Austin Real Estate Investing Podcast. Today we have Levi Benkert on. He does industrial value add projects right here in the heart of Texas, and he's going to tell us how much he loves industrial and why he thinks Texas is the best place to do it. Hey, Levi, how are you?
Good. How are you doing? Excited to be here. Thanks for having me on.
Absolutely. Thank you, and great to have you on here. I know we met off Twitter, so I didn't really know a ton about you. I just saw that you're interested in real estate in Texas and you're in the Austin area. So I said, hey, he's got some interesting stuff to say. He needs to come on the podcast.
I love it. Yeah.
So starting off strong here, first question, what is your favorite restaurant in Austin?
That's a great question. My wife and I recently discovered Dip Dip Dip. Have you been there?
I have not, no.
So it's the guys that have done the ramen Tatsuya. You know, it's got several of the different places. This is their kind of upscale. I mean, it's not cheap, but my goodness, is it an experience. The food is amazing. It's like a 2.5 or 3 hour long thing, and it just like they take you through this whole experience, and it's fantastic, absolutely fantastic.
I'm gonna have to check that out. We love ramen Tatsuya.
Yeah, it's a good spot.
Yeah. Awesome. So for our guests, I know a little bit about you just from following you on Twitter, but could you tell everybody who you are and how you're involved in real estate investing?
Yeah. So I run a company called Harbor Capital. We invest in Class B industrial in really just a couple of different markets in Texas, Houston, San Antonio, and Austin. We've looked at Dallas a few times, but the numbers just don't make sense as well as these other cities do. And so I always like to joke, we're an inch wide and a mile deep in one topic here that we know really, really well, which the further I get into it, the more I feel like I'm learning and realizing what an opportunity exists here. And the more we know in this market, the better we're able to identify deals when they come up and just know this, this one will work and this is why. We've just, as an example, recently bought a building in Houston that's a cold storage facility, had a tenant in the space that's got about 2 years remaining, but their lease is substantially below market. And so we paid high single digits, $8 or $9 million for the building, and are in the process of, we bought it a couple of months ago. The tenant's still there, and we're in the process of already starting to talk to new tenants. With these cold storage buildings, it's this kind of long cycle. Like it takes them a really long time to lease, and they're looking years out. And we're talking to a couple of tenants that at the lease rates that we're discussing with them, we can very easily double the value of the building just by, negotiating with the new tenant, putting them in there. And we certainly will spend some money on tenant improvements to make it ready for them. But, this was one that, first of all, it was off market. We knew a broker who was contacted by the seller, and we knew the area and knew the property. And, there's opportunities like that exist.
Yeah, that's great. So for people listening, I know a little bit about how commercial real estate's valued, NOI, cap rates, but could you explain how you're going to be able to double the value of the building just by putting a new tenant in it? Yeah,
partly because it was so far under leased. The lease rate that the prior tenant was paying was substantially below market. And so it gave us an opportunity to go in and say, hey, the seller may or may not have known that they under leased the building. And we're able to go in and say, hey, actually, we know what this is worth. We know where the key areas to spend money are, paint, make the office look better, in a cold storage facility, put new equipment in and update that. But if you kind of know the key areas to spend money and know that you're buying well, then that's obviously an extreme example. If we could double our money on everything, we'd be in.
Sure. In 2 years,
doing this anymore. Yeah.
2 years later, you've doubled your money. That's pretty amazing.
Definitely.
So you're going in, you're essentially doubling the income is what it sounds like, or is it?
Yeah, it's more that. So it's leased right now for $6 a foot, and the tenants that we're talking to are at 15. So it's a good bit more than double.
So, yeah, that's amazing. Is this a situation where I know a lot of people will buy at what looks like a lower cap rate, but they can see that, hey, there is something like that where the NOI or the income is so much lower than it needs to be, and we can easily get it up. Did you buy at what felt like a lower than market cap rate?
Yeah, I mean, it wasn't extremely low. It was, it was above what our interest rate is on the loan. So in that case, and we got a fixed rate mortgage, long-term debt in there. So I feel very comfortable that, even if that tenant for some reason couldn't leave and the market crashed, and, we're still in a very safe position. We also, I mean, I lived through 2008. I know how bad things can get. And so I kind of have this wiring where I think that the next big crash is always around the corner. And so we're extremely conservative with debt. And I don't actually care so much about loan to value as much as debt service coverage ratio. I want the income from the rent, and, even if it was below market rents, to be far more than my interest and principal payments every month.
What do you look for debt service coverage ratio? Because I know the banks are 1.25, 1.3.
Yeah, we've got several buildings that are at a 2. 1.5 is where I start to get comfortable. And we just do that by doing very little debt, and we just lots of equity, supersized reserve funds just in case things go wrong. We're basically planning for the worst.
Yeah, that's a good way to stay in the game, though.
Yeah, that's right. Because at the end of the day, if you can own through a down market on the other side and pick up some, choice assets while things are on sale, that's how you win long term.
Absolutely. So, and I'm interested in why industrial. What got you started in industrial, and why is that the only asset class you want to focus on?
So I've done multifamily and single family development for years. Sold a business that I had built, good sized business that was a international developer of apartment buildings. Sold that business in 2019, end of 2019, early 2020. Took a little bit of time off to try to figure out what to do next. At a good size sale, felt like it was a time to kind of reconsider, and it was clear I definitely still wanted to do real estate, and looked at all the things I'd invested in and kind of different markets, and realized this was one that was very much kind of didn't have as much traction or didn't have as much attention as it deserved. There's not that many investors looking at industrial, which meant that there was much more opportunity for mispriced assets or, inefficiency. I want to be in an inefficient market. I want to knock on a seller's door or an owner's door and make an offer to them and have them have no idea if that's a good offer or a bad offer, because it's just not a readily marketable price. The opposite end of that is a stock, right? If I offer you, whatever the price might be for the day. If I offer you $100 for Disney stock and it's trading at 85, that I'm offering you $15 more than it's worth on that day. In real estate, multifamily, it's a lot easier to know because there's so many more transactions happening. You have brokers knocking on your door all the time. There's just a lot more interest. And kind of as you get into further and further more obscure markets, the less easy it is for someone to know kind of what the intrinsic value of an asset is. And so therefore, you actually get rewarded for being more of a specialist in those markets.
Yeah. No, I think you said it before we started, or right when we started, an inch wide and a mile deep. Yeah, that's focus is my theme for the year. Just really staying focused on what I'm doing. And in real estate, there's so many other things going on. So you mentioned knocking on an owner's door, and I you might have said that figuratively, but are you buying a lot of these from business owners? So like, hey, business owner owns XYZ business that's in this industrial complex, and we're buying the building from them.
Hey guys, this is Jordan Moorhead here. And I wanted to ask if you could do a huge favor for me. If you could go leave a review for this podcast wherever you're listening to it, that would really help me get this into the hands of other people that are interested in information about Austin real estate investing, and I'd be able to help more people. Thanks, guys.
Yeah, we just bought one last week. That's very common transaction. It's a business owner that's outgrowing the space, and they are building another building, but didn't have enough capital on hand to actually fund the construction loan. And so they sold their current building to us on a sale leaseback structure, which allows them to stay in that building for a year while they construct their next facility. That gives us the opportunity during that year to do some improvements to the site, and go out and market it and find a new tenant for that space, so that when they leave, we basically, the ideal is you have no overlap.
Yeah, that's awesome. So I would assume that's why a lot of business owners don't own their own building too, right? So they can move more easily.
Yeah, certainly. And it used to be that with interest rates as low as they were, many business owners kind of did the math and realized, hey, I should own my own building. As interest rates go up, less and less of those businesses are deciding to buy or build something themselves, and are now just deciding renting is the best solution for them. And so that has put an increase in demand for the type of investor like I've got, the type of inventory like I've got, from businesses that are still growing in Texas. The economy's, despite certainly isn't exactly like it was in 2020. It never should have been. That was just a cheap debt binge that we shouldn't have been on. But now that that's over, Texas is still doing good overall, and those business owners are still needing space. Well, they're coming to us and other owners like us and looking to rent now.
Did you see, speaking of Texas still growing like crazy, that Tesla is going to do another $700 million build out on their Giga Texas area?
I saw that. That's incredible, huh?
That's nuts. They did $1 billion to start. This is almost 3/4 of what they did in the beginning.
Yeah.
And people think that we're going into what might be bad times. We keep seeing stuff like this where we seem to be insulated from it here in Texas.
Yeah, definitely.
Great place to be.
Yeah.
Levi, I know nothing about industrial real estate, and I don't know that a lot of our listeners are aficionados in industrial real estate. Could you talk about the types of projects that you purchase and the cap rates that they're working at?
Yeah. So, we typically do storage. Cold storage. We only have one cold storage asset. It's certainly a very interesting market, but most of what we own are just big warehouses or manufacturing spaces that a company could go into, and we do both single and multi-tenant facilities. From a cap rate perspective, we typically go buy properties that are have some sort of value add component. Either they're vacant, or they're going to be vacant soon, or maybe they've got a tenant in there, but the tenant's paying below market rate. And we're just, basically time arbitrage. We're just waiting until that lease ends and then leasing it at market. We try not to do, massive remodel projects. We won't buy a, 1940s building and go retrofit it or something like that. We'd like to, the easiest place to add value is on the purchase price. And if you look far enough, then you're able to find properties that are kind of under, being sold to you for less than what they're worth.
So cap rate probably doesn't matter as much for you, because you found something that you're going to make the income go up so much more after you buy it. You might not necessarily be looking at cap rate.
I bought a vacant building recently. That's a 0% cap rate.
0 cap. Yeah.
Right. But I know that building, once leased, will stabilize at a 12 cap in a market that trades at 6.5 or 7 right now. Was trading in the 5s not too long ago, but now is 6.5 or 7.
Okay.
And so there's still a decent spread there.
Yeah, that's amazing. So you're in Austin right now. Have you always lived in Austin?
Nope, been here since 2015.
Okay.
Yep.
And how did you get your start in real estate? So you talked about you were in single and multifamily here before all of this, but I 2019 moved over.
When my wife and I got married in 1999, we bought a house right away. I think we put $400 down or something and used one of these like FHA plus some special first time home buyer fund, and did some work to it, fixed it up, sold it a year and a half later, and made some money, and was like, oh man, real estate. And so I've literally, from when I was very young, have first started flipping houses and then started doing land development, and then ultimately, single family and multifamily development as well.
That's awesome. So
yeah,
you started out with flipping houses.
Yep.
And then you got into, you said development right after that?
Yeah, it was, so one of the houses that I flipped actually had, it's kind of an interesting story. So it was on 5 acres. It was, at the time, it was this was in Northern California where we lived at the time. It was the most expensive house that had ever sold in the city. It was like $850,000. We went in, bought the house, lived in it, and split the land up and sold off parcels of the land. Well, we sold the land for like $880,000.
Wow.
And then sold the house. We'd only lived in it for a year and a half. Sold the house for more than we'd paid for the whole thing to begin with.
Wow.
I think
That's
I was
great.
24 at the time, and was just like, all right, game on. Here we go. This worked. And so went through that process, found out basically how to split lots and what kind of value could be added by going and convincing the city to allow you to change zoning on a property or something like that.
Yeah, that's hard. That's generally pretty hard, isn't it?
Yeah, I mean, it was easier in 2001 than it is today, for sure. Although in Texas, it's still not that bad. In California, it was really hard.
Sure. Yeah. No, we've got it easy here in Texas.
Yeah.
So you basically you fell into real estate investing. It sounds like it worked out so well, and just
basically,
yep.
Yep.
Okay.
Have you wanted to be part of GoBundance, the tribe of millionaires, but just haven't hit that millionaire status yet? Well, now you can, not even being a millionaire, by joining our new program, GoBundance Emerge. My name's Jamie Gruber, creator of GoBundance Emerge and member of the GoBundance community. And now you can join. GoBundance.com/emerge. GoBundance.com/emerge. Use code Jordan for $100 off this 12-week goal-setting program and mastermind that'll propel you to being a whole life millionaire.
That's really interesting. Yeah, I think everybody should do that too. I think there's no reason that you're not making your living situation an asset, whether you're house hacking a duplex or you're buying a single family and fixing it up, or you're moving out of your single family and keeping it as a rental. There's just so many ways to make money with real estate. You could buy industrial real estate like you are, Levi, but you could also just keep it simple and keep your house instead of sell it, or remodel your house and make more off of it when you sell it.
It's true.
That's really cool stuff. So it sounds like you've had a really long real estate career. Something I like to ask our guests is if you could share the biggest mistake you've made in real estate investing to maybe help other people not make those same mistakes. Maybe you might have a few.
I do. 2008 was absolutely brutal for me. I went into 2006. I bought a home building company, brought that team on staff, and started building houses on lots that I was developing. 2007 had 400 lots that I'd gone and done the whole process to, split the lots and zoning changes. And many of them had gone all the way to build, curb gutter, sidewalk, utilities, everything was ready to build, and then built, I think maybe a dozen of the houses were built and started to sell a few. And then the banks, 2008 was brutal, especially in Northern California. Banks called up and said, we're not lending anymore on residential real estate. We're done here.
Wow.
And so all the construction loans were literally just, called, and they said, finish up the few houses that you have under construction. I don't care if they're sold or not. We were still selling houses. It wasn't, we thought we could keep going here and maybe just lower prices as things kept going. Obviously it got even worse than that over time, but ended up having to go through the process to renegotiate with lenders and turn over properties. And I mean, it was brutal. Thus the learning from that for me is to be extremely conservative and just plan for the worst. I mean, I think that real estate market is incredibly cyclical. And as we see now, it's kind of the tool, or it's kind of an innocent bystander, if you will, to the government's efforts that, more power to them. The Fed has to do this. They have to keep inflation under control. If inflation goes wild, the US dollar becomes just worthless as a global currency. And that's kind of one of the hallmarks of kind of the global economy and why the US has the place that it has in the global economy. Inflation has to get under control. And when they raise interest rates, real estate values, it's like up in the air. It goes wild. And so, yeah, just be extremely careful and ready for that, like as if it's around the corner any day, because it just very well might be.
Yeah. So low leverage and the right reserves are your ways to keep it in control.
Yeah. And quality product, quality real estate in markets that are growing, where that's flexible. I mean, for us, obviously you kind of get narrower and narrow into the niche. There's all kinds of things like fire sprinklers and truck access courts and what kind of street is it on, clear heights, and how much office space is there, and is it a concrete building or a metal building? I mean, there's all sorts of these things that kind of add up to that term quality that we use to define a piece of real estate that we buy, or define or not, I guess, if we didn't do our job well. But yeah, I mean, if you kind of put all that together in any one market, there are certain properties that will stay leased throughout any kind of economic up or downturn. And that's what you want to have. You want to be on the corner of Main and Main, whatever that is for your market.
Especially with what you're doing, those businesses, the industrial business or the business that's doing a lot of shipping for people that are staying at home or that needs to go to the grocery store, that kind of stuff, that they always need a place to be and they can't stop their business. So, you mentioned office. I think that's a hot word right now. So I know a lot of these buildings, I worked in a warehouse when I was in college, and about the front fifth of it was office.
Yeah.
Do you have a certain amount of office that you're looking to stay away from, or a certain amount of office that you need for most of your projects?
10% is about right for us most of the time.
Okay.
It depends. A big manufacturing facility might not need as much as that, because if you've got a 200,000 square foot warehouse, you don't necessarily need 20,000 square feet of office. So there's certainly some limits there. We're building a couple of different industrial parks in Katy, Texas, just outside of Houston right now. And those are kind of single unit, detached tilt wall, so concrete wall structures, and we're building the offices in and having those are all not build to suit. Those are build made ready to go, spec build, and we're doing right around 10% office in every one of those.
Okay, so just enough space for them to run their business, but not enough space where. Do you find it easier to find tenants when you have the 10% and not a little more than that?
Yeah, certainly.
Okay.
Yeah. If you don't have any office, we've got one right now that we're leasing that has no office, but we're saying we'll put it in later. And that is tougher to find. You need it ready to go.
So you'll put it in later, like you'll convert part of the warehouse space to an office for them?
Exactly. Yeah.
Okay.
Yeah. But a small tenant, they don't want to wait for that. They'd rather have something that's, completely ready from day one.
Absolutely.
Yeah.
So Levi, you've been through the Great Recession. You've been in a bunch of different asset classes. It seems like you're excited about what you're doing now, and you're on a great path. If you had to start over, is there anything you'd do differently?
That's a great question. Yeah, I mean, I sure wish I would have gotten into industrial a lot sooner, or picked a less popular asset class a lot sooner. I don't necessarily think industrial is kind of the one and only. I mean, I think you could do small retail, you could do gas station, you could, there's all sorts of different specialties that work well for those who are dedicated to becoming, the best of the best and learning that specific market. And so if I had to do, if I had a chance to go back and talk to my younger self, I would say specialize.
Yeah, no, that's a huge advice. Even for me, I know when I I mentioned earlier, if I try to focus and I stay focused over a longer period of time, I make so many better results. And it's when I'm all over the place and trying to do a little bit of this or a little bit of that.
Yep.
I know multifamily is super hot for people and has been for years and years. Maybe not so hot the last couple months, but has been for so long. And finding a good multifamily deal was so hard.
Oh, absolutely.
For a few years there. And
yeah. Well, now that you can find them where there's not as many buyers, right?
Yeah. So, more about your business. You said you're a GP with industrial real estate projects. So I assume you all are taking on investors?
Jordan Moorhead here. Really quickly, wanted to tell you a couple other ways you can keep track of us. If you want to listen to all these podcasts and ask questions, the Moorhead team on YouTube is the best place to be. And then Austin Real Estate Investors on Meetup is a great place to keep track of all of our meetups we have going on.
Yeah, so we have about 1,400, just over 1,400 investors that are registered with us, accredited. Everyone's got to be accredited to be on our list.
Mm-hmm.
We send our deals out to increasingly smaller groups of that 1,400, just because we've had a good number of complaints that people don't like that kind of cattle call where a deal gets sent out and you've got a couple hours to respond, or you miss it, or you don't have time. And so we've started sending it out to maybe 10% of the list, and we start with existing investors first. We say, hey, if you're in a deal already, you get first look, and take your time. Happy to answer your questions and dive in deep. I just as an LP in a bunch of deals myself, I know it matters if you have the time to look in and be able to ask questions and figure out if this one is really the right fit for you. And I want investors to be happy that they're in the deal with us and understand it.
Yeah, no, I think it really helps that you're also a passive investor in other people's deals too. So rather than just, hey, I'm out here raising money, hey, I've actually invested a lot of money with other people and I know how the process works. And you can, like you said, you could speak to it a little better there and say, I know I want time to analyze the deal and figure out if it's right for me. But that's cool that you're prioritizing your loyal investors first, and giving the opportunity to them, and then shooting it out to a broader audience maybe later if it doesn't get fully funded.
For sure.
Do you have an idea of where you're going next? It seems like you're moving really quickly with this industrial real estate and you guys are doing really well. Do you have a vision for, let's say, the next 3 to 5 years for yourself and your company?
Yeah, we bought just over $100 million in 2022 of industrial in Texas, hoping to double that next year. Our goal is 200. I always say that with a very, I hold loosely to that goal, because if we don't find new deals, I'm just as happy buying nothing for the year. But from an infrastructure standpoint, we have the team, systems, processes, and capital in place to be able to take down 200 million of the very specific type of product that we know and love so much. And so that's our goal for this year. Broadly, kind of long-term goals, we're trying to go much bigger. By 2025, hoping to have $1 billion of assets under management. Continue to grow the team. I mean, but not huge. I don't want to 100-person team. We'll stay in this kind of under 20. We've got 8 on the team right now. But yeah, there's this kind of sweet spot we're getting to of, maybe $2 billion of assets under management over the next 10 years.
Okay.
It's a good size company for sure.
So you said $1 billion by 2025. Where are you today? You said 100 million in 2022, but I know you didn't just start in 22.
135 million owned now.
Okay.
Sold some off and have, I've done about 400 million of multifamily and single family development work before this. But, this is all just industrial, just as Harbor Capital here.
Okay. So the goal for Harbor Capital is $1 billion.
Yep. By 2025. That's kind of first goal.
Awesome. So really cool goals you all have for the next couple of years. Levi, I know we talked about a few books before we got on here. You see, just behind you, there's a whole bookshelf there. So you seem to be a lover of reading too. Do you have a favorite business or mindset book that you like to recommend to people?
That's a good question. Essentialism is one that for several years has been my favorite. I think I've read it 3 or 4 times now.
Really?
That's a fantastic one. Endurance. Have you ever read that one? It's the Shackleman's adventure. That one's intense. That's a really good one.
That's a great book. Yeah. So I try to read something more entertaining, like Endurance at night. So I always have I'm reading Sapiens right now at night. I read during the day, I read more content that's geared towards business or investing. And then at night I try to read something, but Endurance is really cool too.
For sure. I'm getting ready to launch a book club. I realize there's a bunch of other people just like me that love to read and want to do this together. So I'm hoping to be able to launch that soon here.
That's awesome. So yeah, that leads me into my next question. What's the best way for people to get a hold of you or just to follow you?
I spend most of my online time on Twitter, and at Levi James here is my handle on there. I talk about industrial real estate and all kinds of real estate stuff on there. So that's certainly my spot.
Real estate Twitter is just blowing up.
It is. It's a whole thing now. It's fantastic. Mm-hmm. Definitely. I've kind of given up on LinkedIn and other ones. Mm-hmm. Twitter's the spot now. So
do you have a website maybe where people can reach out and learn about your company? Yeah,
harborcap.com, harborcap.com. All kinds of stuff on there about our projects and what we do. So,
and they can get on your investor list there too.
Yep. Yeah, there's a questionnaire on there. We try to make sure we're following the SEC guidelines. So just ask people to verify and everything. They're accredited. Yeah.
Awesome.
Yep.
So, and remind me again your Twitter handle there.
It's at Levi James here.
At Levi James here.
Yep.
And then if you're on Twitter, I'm at Jordan_Moorhead. Jordan_Moorhead everywhere. Instagram, I think Facebook, probably the same thing. But absolutely follow Levi at Levi James here on Twitter. Go to harborcap.com. And of course, if you want to follow me on Twitter too, at Jordan_Moorhead.
That's awesome.
All right, Levi, thank you so much for coming on here today. Really excited to hear your story. I know our listeners are going to be too.
Thanks, Jordan. Appreciate it. This has been fun.
Yeah, talk to you soon.
All right. See you.